Simon, how are you?
I'm great, man. The New York Attorney General is suing Alex Majinsky, just announced.
Really?
Yes.
That makes you that must make your day.
Well, he's obviously a very wealthy person as a result of creditors' funds. So the New York Attorney General is deciding to sue to try and get the 50% he stole from all of us back.
And do you think he'll be facing criminal charges soon?
Well, I haven't had a chance to read it because it just literally came out the second you started this. But he's being called a fraud. It's all being called illegal. It's been calling securities fraud, various other things. But I've got to have a bit of a deeper dive to understand what happens next. But I think the first important thing is to get creditors their money back and to take back some of the unjust enrichment as a result of him you know, and his wife sending TikTok videos of the lavish life that they've living since they defrauded creditors out of so much money.
You're not talking about recent videos, are you?
No, I mean, well, they ever since the pause, like we've seen lots of stuff since the pause, and Alex Majinsky's wife created a conspiracy theory that everyone should come after me, and that I stole all the money, and that I was paid by SBF, and I become a very wealthy person as a result of it. So I think they're losing the plot.
Shit. Well, congratulations on that letter. That must make your day. Umbrella, how are you? Is Umbrella there?
Yeah, doing okay. Yeah. Can
Yeah,
you hear
man.
me?
You and Alex are both sick. I appreciate you having the time to join.
Yeah, I think of quite a few people I catch this time of year, especially in the northern
Man, like
hemisphere.
you and Simon, we've been covering this since the FTX days, and every time I think we're like gonna catch a break, um, new shit hits the fan, and now we're covering DCG again. First time we covered DCG, we had Andrew come in, give us an overview, ring the bell, and many of us, I started receiving messages that were spreading FUD, and it's turning out to be worse than we initially thought. And here we are covering DCG again. But maybe Simon, you can kick it off before we go to Andrew, just for the audience and anyone new to crypto. An overview on why DCG is so important and what it means to crypto.
Yeah, sure. So, welcome everybody. Yeah, for those new to the industry, Digital Currency Group is old school. So, I've invested in over 100 different companies in the industry, and pretty much every company I invest in, Digital Currency Group also invests in. It was founded by Barry Silbert, who before Bitcoin was had a company called Second Market, which was allowing people to buy pre-IPO shares that he sold to Nasdaq, and then he got into Bitcoin. And he's been an important character, and over the years he bailed out CoinDesk in its time when it was about to go bust. When there was only a few people. So CoinDesk is a subsidiary of Digital Currency Group. And other notable companies is Genesis, which is in the whole crypto lending space, did the same as other people, where essentially they didn't register as securities, and people were generating yield. And one of the companies that really their whole platform on top of that was Gemini, which was co-founded by the Winklevoss twins. Ironically, the Winklevoss twins, I think if I remember correctly, way back in 2013, they were first to try and register a Bitcoin ETF.
That's correct.
And
Yeah, that's
yeah,
correct. Hmm.
and so since they've been battling it for years. I think they eventually gave up, and more players tried to get the ETF. But one of the subsidiaries of Digital Currency Group is the Grayscale Bitcoin Investment Trust. It's got a ticker GBTC, and it was one of the major trades that all of the crypto lending platforms were using, where they were arbitraging the premium between the price of the trust, which are like shares, and Bitcoin itself.
So,
And
so can you explain how the trust works and how does it represent Bitcoin and what that discount means? Just again, for anyone in crypto, and if you guys have questions, the bottom right corner, you can ask the questions there. But just to give them the basics before we
yeah,
discuss the concerns.
Yes. So if you're a pension fund, or you've got a traditional brokerage account and you're not really into self custody yet, you don't know how to buy Bitcoin, then GBTC was just a really easy way of you buying shares, just as you would buy from any other company like Tesla or something through your broker. And their job was just to have enough Bitcoin to back it. So they would hold the Bitcoin in Coinbase custody. And I think, I haven't checked recently, but I think it's got about 650,000 Bitcoin backing it. But the shares would still trade. So they could, it wasn't like an ETF where it's really backing, it's really tracking the price. It had at times a really big premium, which means that people would pay more for shares in GBTC than they would buy Bitcoin, because it was a very convenient way to own it in like your retirement fund or something like
So
that.
in the early, I've sent you a co-host invite, by the way, Simon, just to make more room on the stage.
Okay.
But essentially, just for the audience, the premium that was there earlier was just because we had what was called the herd, like all these large institutional investors coming in, but having issues on how to custody Bitcoin. And correct me if I'm wrong, Simon. That it was just easier to buy shares in GBTC. And what happened after after the correction, after the collapse, is that premium became a discount, and the price of buying Bitcoin through GBTC was actually cheaper than buying it Bitcoin directly. And that's mainly now because there's concerns on. Would you say, Simon, the reason for that is that people are concerned about the health of Grayscale
Well,
or of
originally it was
DCG?
because many of the hedge funds like Three Arrows Capital and crypto lending companies like BlockFi, they had to sell in distress in order to meet some of their withdrawal demands. At the same time, there was interest rates increasing, which created the crash in the first place. So originally it was macro, then it was fear in the market, needing people to sell it. And then it just moved into fear that GBTC, in GBTC and just general fear itself. And now it's reached a peak of approximately 50% discount.
That's crazy.
Yeah. So, and it may never come back. So one of my friends, David Bailey, who I've known for years, he's a shareholder in GBTC, and he's trying to rally all of the shareholders together to get over 50%. So if you own shares in GBTC, head over to redeemgbtc.com, and they're trying to get it where they can change a fee or make it where people can redeem it for their actual Bitcoin, by getting 50% majority shareholder vote.
So I want to go to Andrew. Andrew, we're talking, and I kind of thought twice before writing this in the title, because we've been very careful on how we talk about DCG earlier, just because of how big they are. And I think it was Simon, you said to me in a call we had, is that DCG is one of three, big companies left standing in crypto. DCG, Gemini, and Binance, I guess. Is that?
Oh, then I
Would
mean,
you?
there's still big companies, but yeah, DCG is statistically significant. It holds shares in everything. Is shareholders of companies like TradFi, Visa, Western Union, and the subsidiaries are very sizable companies. GBTC is, it brings in about 200 million of fees a year. And here's the real challenge right now: is that there's what's right for digital currency group shareholders, GBTC shareholders, and obviously the pending Chapter 11 for Gemini are all in really conflict, because digital currency group apparently borrowed a lot of money from one of its subsidiaries in order to prop up the price of GBTC, which led to a losing trade. And then they also tried to prop up many of the bad investments in companies like Three Arrows Capital. So there could be a very significant hole in a very important company.
So Andrew, you were the one of the first to ring the bell on DCG in the previous space we had months ago.
Mhm.
What are your
Yeah.
thoughts now? First, maybe kick it off with what does it mean for crypto if DCG falls?
Well, it's Simon did a really good job of walking through um, what DCG is. They either own outright or own pieces of at least 150 plus crypto focused companies in the space. So before FTX became the venture capital arm of choice in the past 2 years for crypto companies, DCG was that from 2015 to about 2018-19. You wanted to be associated with DCG. Where we stand now is a comedy of errors that have come to light, and a bunkering of leadership at DCG and Genesis, where all we've received from them in the past 45 days are 2, maybe 3 communications, not from DCG directly, but from a few of their subsidiary companies, mainly Genesis, where they've sent out a couple of investor communications via email, and Grayscale has sent out an end-of-year investor letter. There have been, legal proverbial Easter eggs in all 3 of those communications, but I would suggest that the most important communication was earlier this week when Cameron Winklevoss sent out an open letter to Barry Silbert himself, not to Genesis, not to DCG, but to Barry, and used terms like commingling, used terms like personal gain, used sentences like kamikaze NAV trades with Grayscale and GBTC. Everybody that's listening to this needs to understand who the Winklevoss twins are currently in the crypto space and how they have set up their company and their own personal reputations. So before everyone was having any conversations about meaningful regulation in crypto, Cameron and Tyler were having meetings upon meetings upon meetings with regulators. They were one of the first to receive the BIT license in New York State, which is notoriously difficult to get and enormously expensive to advocate for. Before the likes of Sam Bankman-Fried was spending enormous amount of times, with the SEC and regulators, Cameron and Tyler were doing that in earnest, and created an entire campaign around crypto and their company. And I think everybody at this point has seen the picture that I've posted a time or two, where there's a bus that's wrapped in a saying from Gemini called "Crypto without chaos." So these guys have a reputation to defend. They have relationships to defend, not only across the crypto ecosystem, but inside of the regulatory bodies that they have built enormous goodwill with. I say all that to say this. You can bet that the open letter to Barry that was sent out was edited and looked at and evaluated from every possible legal angle that exists, every possible how will this sound to regulators angle that will exist, and what are the potential repercussions that exist. I guarantee you that. So the fact that language like commingled, personal gain, kamikaze trades was still used in a letter like that is substantial. Okay. On top of that, I've had multiple conversations. Now, when I say multiple, I'm now up to about 9, confirming that there's an active investigation at the SEC with DCG. And let me give some context to that. I don't know if anybody or everybody has seen the show Billions on Showtime. I'm assuming a good portion of people on this spaces have. So an active investigation doesn't mean that charges are about to be filed, that DCG has received a letter associated with coming charges, or an inquiry of any kind. An active investigation means that in a lot of ways, just like the first season of Billions, and there's a whiteboard somewhere, and there's a file that's been opened associated with a potential action where they are doing the math, beginning to make the connections, beginning to prepare a potential case based on what they know in the moment. It may be that that case goes nowhere. It may be that that case goes somewhere. But what I have confirmed, again, with up to nine sources at this point, is there's an active investigation into DCG at the SEC. Also, another thing to say real quick, so that it's understood. The SEC is not the DOJ. The SEC is a civil organization, right? It's not a criminal organization. I do not have any information associated with the DOJ and DCG. It's only the SEC at this time. So this is a civil organization that brings actions, specifically, generally speaking, in financial crime, and not the DOJ.
I want to go back to something you mentioned, is that the open letter that Tyler Winklevoss tweeted a few days ago would have obviously
Mario,
been
I pinned
checked.
it to the top if anyone wants to see it.
Say that again, sorry, Simon.
I pinned the letter as well.
Oh, okay, perfect. I appreciate it. So anyone that's listening, you can check the letter at the top. So for him to have used terms like commingled, personal gain, and kamikaze trade, do you want to go through those three terms and why they matter and what they mean? So commingled, for example, is essentially using the funds from one entity for the benefit of another.
Commingled is absolutely the worst allegation and the most concerning for Cameron to put into that letter. I will defer to Simon or anybody else that's associated with that, has a better understanding of the legal ramifications. But as I understand it, if you're a financial institution of any sort, commingled is the worst possible allegation that could be leveled against you. And somebody can speak to that. I'll stop here and let somebody speak to that. But
Sure.
that is a term that is enormously problematic.
By the way, John, Ed, feel free to jump in, especially on this point if you want to
Sure.
comment on it.
Well,
What are your
I want
thoughts
to
on
make
this,
one.
Ed?
I want to make one major point, which is, and I'm not accusing anyone of anything. I'm not saying anyone's out of sync here, but everything that's being said, and DCG, Genesis, very likely screwed over many people. But as usual, the Gemini, the Wet brothers, the Winklevosses are being let off the hook here. If they knew, and they definitely did, because from day one of Gemini Earn, the Winklevosses have acknowledged that these were not loans. They've said they're interest-bearing, but then they'll say, actually, it's not really an interest-bearing account. It's a loan. They've known for a while that this was the case. And when the Three Arrows Capital thing all fell down, why didn't they end Gemini Earn there? I believe, and I don't think they're wrong in what they're saying to DCG and Genesis and Barry Silver, but they are using this as an opportunity to escape blame for losing $900 million. And also, again, everyone sounds like they're saying correct things, but the major point here is that money is gone. Consumers are never seeing that money again. And I think it's very important to note who the real villains are here. And it's Barry Silbert, DCG, Genesis, and everyone Andrew's been talking about. Sounds like the SEC's sniffing around, but I would say the Winklevi are guilty, and they are the ones who acted recklessly too. And I just think it's important to add that. Otherwise, everything that's being said is fairly sound.
So can you just explain for the audience, Gemini?
Can I just clarify on?
Yeah, please do.
We don't know if 900 million's gone. For any
I mean,
creditors out
mate,
there.
where is it
It's
then?
gotta-
Because
Well, no, I mean,
because
it's got to go through a Chapter 11 process, and
Sure.
some of it will be there, it may not be there. Like, I'm just saying that you would have just freaking out a bunch of people that may have.
I mean,
significant
they
wealth
should be freaked out.
on
It's
them.
$900 million. And if you look at the fact
I
that
understand, but
from
even
the
in the
terms
case
of
of-
service, yes,
Yeah.
yes, but please let me finish. So the
Sure.
terms of service specify that this is a loan, that Gemini is not on the hook for any of this money. Specifically, from the very beginning, when Earn launched, it's specified that in the event of an insolvency or fraud, Gemini is not on the hook. So whether or not this money is gone or not, and my personal belief is that most, if not all of it is gone, even if it isn't, Gemini is going to, in my belief, try and wriggle their way out of this. Again, not saying DCG and Genesis are not awful and acting in an immoral way. I'm just saying that it's important to characterize every villain in this story.
Yeah, exactly.
I would
I just
add,
wanted to make sure that people, we don't know.
No, you're right for getting the exact points.
Yeah, I would also add that Ed is not incorrect. That the level of recklessness that Ed described associated with the Winklevoss twins and their Gemini Earn product is absolutely correct. Reckless that may not rise to the level of illegal, but reckless is still something. And at the same time, there are there can be legal real legal ramifications to recklessness. No matter where your what you thought should have happened, what you hoped would have happened. There are legal terms associated with the idea of recklessness, and I would also add that there is a thought, and it's a thought that should be well considered. That the folks that we're talking about here, the Barry Silberts of the world, the Cameron and Tylers of the world, the Sams of the world, there's the amount of money and assets and customer funds that were moving through these systems. These are guys that should have all understood where it was going, why, and how. And
absolutely,
it's my contention that the genesis of all of this is not necessarily one company. Although a case could be made that is the fact, but it's much more ego and hubris. That these guys had limited structure applied to what they were doing, had billions of dollars at their fingertips, and believed that they could make anything happen in any way, shape, or form. And I think that's the real genesis here. I think that's where the recklessness comes from. And the finger pointing will not stop publicly. And you can bet that the finger pointing that's happening privately in SEC offices, DOJ offices, and other legal type of offices that matter is on fire right now.
I also want to add one further point. I fully agree with everything you're saying. So one of the earliest people on this was Michael Bergsberg over at Dirty Bubble Media. And one of the early points he made was he was one of the first people to sound the alarm that DCG and Genesis may be commingled. But Andrew, you make a very, very good point, which is all of these people were positioned as noble stewards of the future of money. And then I refuse to believe for a second that the Winklevi, the Identical River Giants, absolutely knew what was going on with DCG and Genesis. In the same way that I believe that everyone kind of knew Sam Bankman-Fried was full of it. You could tell from the Voyager filings. It was hard to make that call because everyone still believed it. What we're seeing die here isn't just a coterie of people ranging from frauds to assholes, but we are seeing the death of a cult of personality. All of these people rode high on press, on these wild, possibly completely made up sums of money. And what I worry about the most here is that it's very obvious that someone, if not all of these people, were part of holding up the price of cryptocurrency. And right now, I wonder who is manipulating this market still, because SBF definitely was. DCG and Genesis, if they have to start dumping assets, this could be very bad for many, many people. And I'm not just talking crypto people, I'm talking people who were convinced by Super Bowl commercials, who were convinced by Coinbase's "We are not frauds, we promise" commercial that recently ran. These people are going to suffer. None of these rich people are going to suffer. These are wildly rich people who are going to defer these crimes on, well, crimes is a subjective thing. These horrible moves, these unethical moves, they're probably going to get off scot-free. And what sucks is at least one of these people is a criminal. And based on everything Zoo's been saying for 3 Arrows, if any of that's true, someone from Genesis is going to jail at least.
What does can you so yeah, I want you to summarize, Ed, what Zusu said, but before that I want to quickly go to John. John, considering your background, I'd love you to comment on what was said so far, but also the potential SEC investigation that Andrew touched on and what that means for DCG.
Sure. Thanks for having me on. I worked in the Division of Enforcement at the SEC as a lawyer for about 20 years and was chief of the Office of Internet Enforcement for about 11 years. And I taught at the FBI Academy, and we had FBI agents that we met with maybe more often than weekly. Now there are FBI agents actually embedded at the SEC Enforcement Division. So there is, and also I spoke with the people at FINRA and state regulators when I was chief almost daily. So the level of interaction between law enforcement and regulators is right now probably more intense than it's ever been. There's a specialized crypto unit in the enforcement division now. There's a specialized crypto unit at the FBI. The enforcement division, I think they have 30 or 40 people in that unit. They just got money to get 33 more people. Chairman Gensler of the SEC, Gerbia Gruhl, the head of enforcement for the SEC, David Hirsch, the head of the crypto unit, have all been saying using the same metaphor during the last 2 weeks when they're talking about all of these entities that have really co-opted the nomenclature, traditional, very important regulatory nomenclature like exchange, market maker, broker-dealer, investment company, and use that nomenclature to sort of convey a feeling, a sentiment of trust when it doesn't have any of those things. Because, for instance, what happens at a place like Genesis when you suddenly wake up one morning and your accounts are suspended, if that were an SEC regulated entity, there would be teams of compliance examiners and auditors and inspectors from the SEC and FINRA on site immediately trying to find out what happened and demanding every single text, email, and talking to everyone. Now, what's happened since FTX, and I don't have any personal knowledge of this, but I'm pretty sure that this has happened. Immediately, any entity that was at all registered with the SEC probably is the subject of a for-cause examination by the SEC examination groups. Those groups will go in, ask all sorts of questions, ask for any sort of information, and everyone has to comply or they lose their license to do business or they get referred to the Division of Enforcement. So it's a very transparent situation when you have a regulated entity. And all of those entities are probably being examined right now. Everybody's working together. There are probably tons and tons of cases that are in the pipeline right now. I think there's a sweep coming. Every indication, when I was chief of the Office of Internet Enforcement, we had 6 different sweeps. And a sweep is when you really work together, streamlining investigations to make them flow and move more expeditiously. And you try to bring them all at the same time to really create an important message. And as I started to say before, Gensler, Gerbia Gruhl, and David Hirsch have all used the same metaphor where they've said there's no more runway left for these entities who we told to come in here and get into compliance. And Chair Gensler has also taken every opportunity in all the FTX press documents from the SEC, not to lambast Sam Bankman-Fried, but to issue a real warning, an admonition to any entity who have co-opted this nomenclature of broker-dealer, exchange, and market maker, and that they need to come in and register, and if not, they're going to get sued. And these definitions, the definitions of broker-dealer, of exchange, I mean, there's really only a dozen or two exchanges that even exist in the United States because the regulation is so onerous. And broker-dealer regulation is similarly onerous and very broad. And Gensler has said very clearly that there's no new laws necessary to capture any of that. That's one of the biggest myths. I've written a lot about this. I teach at Duke Law School and taught at Georgetown Law School before that. This idea that you need regulatory clarity And then I heard the same thing when I was chief of internet enforcement that, hey, this internet is a new thing. You need regulatory clarity. Well, that's not how SEC regulation works. SEC laws are very broad, are all principles based, meaning if I want to go to my neighbor's house and steal their lawnmower, there's no statute on the books, no federal or state statute that says you can't steal lawnmowers. But of course, that's breaking law because I'm stealing something. And that's a principle-based law that says you can't steal. And those laws are the same when it comes to broker-dealer registration, exchange registration, and these so-called market makers. The SEC has already brought a few cases in that area. So I think the SEC is moving very quickly. I also think in these situations, based on my experience, I always had a small handful and sometimes a large handful of informants of every type. There are whistleblowers who come in. There are lots of ways the SEC can gather evidence. They can get it from testimony. They can get it from documents. They can get it from whistleblowers. They can get it from informants. They can't get it from the grand jury. If a criminal prosecutor has a grand jury convened, the SEC staff that information is secret, so they can't get that information. But they can get just about anything they need, and they can provide all kinds of support. Oftentimes the criminal prosecutors will do search warrants and find all kinds of documents, or they'll take testimony from informants in secret, and they'll ask the SEC for technical assistance there. So what you have right now, I think, is a sweep that's in the works that's going to happen any day. I think when it comes to these entities who suddenly say we just can't find this money or we don't know what we're doing, it shows the perils of investing, that you really have no protections in these situations. There's no auditors, no examiners, no oversight, no consumer protections, no rules for record keeping, for commingling, no financial standards for operation, liquidity, no net capital, no insider trading rules, no compliance. You're really on your own, and you become, sadly, an unsecured creditor, as opposed to the person who had an account, say, at place like Merrill Lynch or Charles Schwab or even Robinhood. When something bad happens there, those assets are yours. You don't have to wait in line with other creditors to get your assets. But as the court said in Celsius just yesterday, those assets in these situations don't belong to you anymore. You're getting this interest rate, this absurdly high interest rate.
One thing though, wasn't the Celsius one a very specific part of their terms and service though?
Perhaps, but
Yeah.
if a trustee can't, yes, I agree with you. And I don't know what all the terms of service are for all of these. But generally, it's a very open area. And you have to look at these situations. When you have a bankruptcy trustee, one of the things that people completely miss about this entire situation is the power of a bankruptcy trustee. A bankruptcy trustee hires a bunch of consultants, lawyers, legal teams, litigation teams, investigators, forensic people, and their job is to get assets for creditors. They're not looking necessarily at shareholders like the SEC is, because you have different classes of people here, right? You have shareholders, you also have customers, and you also may have other creditors. And those customers may be unsecured creditors or may be considered more akin to shareholders. It's very difficult to distinguish exactly who is there. But the bottom line is the trustee hires a litigation firm to go out and look for any preferences, any fraudulent conveyances, any other assets that can possibly be clawed back. And that law firm has unbelievable incentives to try to get every scrap of asset they can because they're going to make fees that way. And if you sit back and you go, hey, this law firm is acting not responsibly, is being too aggressive here, and they're not doing things right, and you go to the trustee, what's the trustee going to say? The trustee's not going to say, yeah, this law firm that I hired is doing things wrong. No, the trustee's going to back that law firm. So you have a very highly incentivized law firm that's going to be really doing everything they can to get assets and going to be very, very, very aggressive. So I think that's just something to worry about.
Yeah, Simon, I'll let you respond to this, but also add, I want to pivot for the audience. I want to do two things. The audience is asking more just a general overview, very simple one, between the relationship of Gemini, Genesis, DCG. And secondly is what's next for crypto if DCG does fall. So I'd love you to comment on that, and then we go to Andrew to get his thoughts on this as well. Because just like everyone is drained out of energy, seeing collapse after collapse, seeing people and companies they idolized back in the bull run go under now.
Okay. So just the overview is that Digital Currency Group is a parent company that invests in lots of companies in the ecosystem. And one of their subsidiaries is Genesis. And Genesis perform paying investors yield and taking out, making collateralized loans. Now, the relationship with Gemini, which is the Winklevoss twins, completely separate company, is that they built a service that allows people to receive yield on their cryptocurrency, and it was used using Genesis. So they would essentially borrow some money, and this gets to the crux of what was just being discussed. The mistake that everyone made in our industry, and comparing it with Celsius, is that Celsius believed that they were exempt from regulations by stating that you are lending us your money and the money becomes ours. Now, for the money to become the property of the financial institution, where they can use it for investments, that would be considered a security, a hedge fund, or you're investing in somebody managing money. And the key difference with a security, because we sell securities, is that you have to do a couple of things. You have to check that the people are suitable to invest, and you have to ensure that they're not investing too much or that they're a high net worth or accredited. Or you have to give full disclosure on how those funds are being invested. So securities laws are all about suitability and disclosure. Now, what the bit that our industry gets wrong is they think because it's not clear whether an individual token is a security or not by their definition, they think that the financial product with the token or cryptocurrency is not clear, which is completely wrong. It's 100% clear. If you are custodying somebody's cryptocurrency, then you're not allowed to touch it. It must be segregated. The word commingled could be that you mingle all of the cryptocurrency for a bunch of people in custody, but you can't use it. That's the key thing. If you, for example, Gemini, they are, as my understanding, they are actually a New York chartered bank, from a trust bank. A trust bank means that you have to match 1-to-1, as opposed to do something called rehypothecation. Rehypothecation means that you can create money, and your assets and your liabilities don't need to be necessarily matched up. That requires a banking license to do that. And so whether you're doing it with cryptocurrency or not, this is all clear. Securities are securities. Custody is custody. And what a bank can do is what a bank can do. And it has lots of protections there.
Is Genesis itself a custodial? Do they have to custody funds 1-to-1?
No, so Genesis was actually a trust bank. They do have to. And then they ignored securities laws, which is why they got, they got investigations for not registering the EARN program as a security. So then if you compare that with Celsius, Celsius said they just changed the terms and conditions, bait and switch their customers when they realized this, to say that we own the money. And therefore, because they had a hole, they were either an illegal hedge fund or an illegal bank. So although the terms and conditions state that the money belongs to them and the bankruptcy court ruled, it doesn't mean it wasn't illegal. And it was illegal because they didn't. And that's why they're now Alex Majinsky is now being sued by the New York Attorney General. Because even if what happened with Celsius is it turned out that it's better for creditors to receive their funds back if Celsius owns the funds. Then, because it's illegal, you can then sue it afterwards once everyone's got an equitable distribution. So these things actually matter. But the mistake that all of these companies have made is that they never registered their securities, because if they did, they would have to have fully disclosed how the funds are being invested. And then people could have said, I only want to put X amount because I think you're doing risky investments, or I'm not going to, I have to be an accredited investor to take this amount of risk with my money. They all
Simon,
ignore
can I ask a
securities law.
really quick question?
Yeah.
Does the fact that Gemini Earn was a loan, like you explicitly agreed to loaning those funds, does that change Gemini's legal requirements to keep things one of one, or does that change things because you were effectively loaning them the money to loan to Genesis?
Yeah. So again, I'm not a lawyer, so let's just preference with that, and this is not legal advice. But it is a loan, and therefore, in theory, if you're lending people's money, then you can do with it as you choose. But at the same time, if you're going to invest it, it's a security, and so you would have had to have disclosed. So you can't circumvent securities laws, and that's actually what's happened at the moment. So Celsius, has circumvented securities laws by saying it's a loan, so they don't have to disclose anything. The Chapter 11 judge rules that the money is the property of the estate, so they can give it back to unsecured creditors. But now you can sue them because it was illegal to lend it and not actually register it as a security in the first place. So it's kind of like a syntax, an order in which you can get the best result for creditors. But it was fraud. It is illegal, and that's what the New York Attorney General is suing Celsius for right now, because you can't just borrow money from somebody, say that you're going to give it back without either the protections of a banking license or the disclosures of a securities offering.
And it isn't enough to layer that into the terms and services.
No, I mean, it's like saying in your terms and service, I can kill your mom. You can put that in the terms of service, but can you do it?
Scientist?
Need to call my mum.
Real quickly, Mario. I only have a few minutes left, so I want to cover a couple things. First, everybody should have listened real closely to everything that John Stark had to say about what goes on at the SEC, his experience there, and what he thinks is on its way. That's real world experience. That's a real understanding of how those organizations work, and a real understanding of the regulatory environment associated with. We don't need regulatory clarity. There are laws on the books that should be followed. A real world example of that is, I've been in the crypto space since 2014. I've started 2 different companies that are now on my third. At each stop, my current partner and partners before, we considered doing a token. Why did we consider doing a token? Because it's an easy way to raise money. But because we're smart enough to have really good lawyers, every single time here in the United States, they said, listen, the risk is too great. It's going to be a security. What's associated with being a security is a laundry list of items that put the raising of those funds, the use of those funds, and then the ongoing existence of those funds at real regulatory and legal risk. So we've never done it. Anybody that's issued a token of some sort that isn't Bitcoin, which has been dubbed by the CFTC, yada 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 yada, is at risk and is real peril. Anybody that is trafficking in tokens, loaning money associated with tokens, leveraging tokens, is in real peril right now. Something that needs to be said to give context to the larger environment right now. I've made the point a few times in tweets that there are real connections here to the accounting fraud scandals in the early 2000s, the likes of Enron, WorldCom, Tyco. And then there are, some elements of Madoff-esque type stuff as well. So I would toss out there that, a guy like Sam Bankman-Fried, it's very Madoff-esque, right? Took a bunch of money, used it on all the stuff he wanted to have in his life. So fairly cut and dry fraud type of stuff, right? You can make the case that DCG, Genesis, and maybe some others, Gemini even, we're getting now into the space of probably accounting fraud. The conversation associated with DCG and Genesis are now these intercompany loans, right? Which, by the way, when I was told by Genesis creditors a month and a half ago that there are intercompany loans that exist that have never been disclosed, again, just again, full disclosure, I'm not a reporter. I'm not a journalist. I still don't even know how I got in the middle of all this. I really don't. But ended up having a lot of conversations. And, a couple days after, I kind of disclosed that existed, they felt compelled to tell the world that there were several outstanding loans from Genesis to DCG. My guess is over time that's going to be in a lot of ways the beginning of the real undoing of DCG at large. Is the commingling? Where did those funds come from? Why did they go to DCG? What were those funds used for? We still don't have those answers, right?
Genesis just cut 30% of their staff. Just came out on the block.
Yeah. So you have answers that haven't been given yet to real important questions that can be harkened back to the likes of WorldCom or Enron. Those were accounting frauds. People weren't taking money and using it on Bahama real estate and parties, right, and sponsorships. Though that was money moved inside of company and LLCs here, LLCs there, LLCs here, LLCs there. I think John can probably speak to this better, but there were loans associated with this, that, or the other. All of it outside of what was supposed to be done from a regulatory standpoint inside of a company. And that's the reason why you have a place like DCG and Genesis that have hired teams of lawyers, teams of advisors. They know what's coming. They know what's ahead of them. And they have hired those people and paying them enormous amounts of money to find a way to limit the damage. The damage is coming. It's just, to what extent is the damage going to find its way to a founder's doorstep? That's where we're at in this place. The damage is coming. It's not a question of, is DCG the last domino to fall? I think the writing is, I don't know how bold it has to be on the wall to see that DCG and Genesis are not going to stand much longer. Another example of that is this. They announced, oh, we're going to raise $1 billion. Well, just kidding. We think we're going to cut it to $500 million. Elon Musk just raised $750 million for his SpaceX venture, right? A venture that sends rockets up into orbit and then lands them back down on the ground. Okay, who in the world is going to loan DCG or invest into DCG $500 million? Almost as much as the guy that puts rockets up into space and then lands them on the ground. You kidding me? Seriously, that's not going to happen, right? So, is DCG and Genesis going to fail? I'm not a lawyer, I'm not an accountant, but the writing here is everywhere. And again, I would defer to John on this, but I can't imagine a world in which DCG brings in a huge venture capital partner and somehow saves themselves. I just can't see it.
What does that mean for crypto, Andrew?
What it means is there's a washout period, right? It in the same way that energy companies didn't cease to exist with Enron, in the same way that communications companies didn't stop to exist when WorldCom was turned upside down. It means that there's a cleansing of the space. It means that the people that chose to act as good actors, and a lot of them in a way that was difficult for them to keep up, right? When you have folks that are flaunting the law and flying past you, it's difficult to stick to the law. But those that did will remain. But I think that the crypto ecosystem is going to go through a fairly difficult cleansing period. But the folks that remain will be the utility builders, the folks that stuck to a certain type of structures having to do with law and the legalities of building companies the right way. But to your question, very specifically, the sweep that John talked about, I have to agree with him. And a cleansing period is, I think we're in the beginning of it. I will add this personally. I'm a huge proponent of crypto as a financial piece of utility, Bitcoin in particular. We're building our company on the Bitcoin blockchain and doing some things that over the next 3 to 9 months will be announced. But so I want crypto to do well. I want it to continue to grow, but it has to be done in the right way. And it has to be done in a way where the quote unquote grifters and bad actors are fewer and fewer. And some of
Who's
these
left
actors,
then?
well, there's a lot of people that you don't know.
I
There's a
mean
lot
this.
of
I mean this
people.
nicely, but
Yeah.
what part of crypto has a utility right now, other than the most successful utility of cryptocurrency right now has been fraud? And if you
Okay.
can find me, I have to
So let
interrupt here
me
because it's
give you
suggesting this is suggesting something very different than
yeah.
reality.
So let me give you, and I take your point and understand it. That's a valid point, because we're on this space talking about folks that have done an enormous amount of grift, right, associated with crypto. But I will say this: I'll just give you a small amount of background as to.
Can we separate Bitcoin and crypto? Sorry, carry on.
Yeah, agreed. Separating Bitcoin and crypto, right? But I will say this: that there are people in the space that are doing things like working with traditional banks, say Citigroup and UBS, and working on pilot programs where they're taking alternative assets, things like huge car collections or watch collections or gold collections or silver collections that are authenticated on a blockchain that can then be lent against and custodied at a big bank, and have insurance associated with that type of account. That is blockchain, Bitcoin, blockchain based type of work, that is utility based, that is digital in scope, that can then be, add utility to the current banking system, the current regulatory system, but add new lines of business for people looking to do certain things with assets that they have. That doesn't exist now. Let me give you another example. So, say you're a car company like Aston Martin, and you're going to, you want your Valkyrie line that only has like 1,500 cars that you're going to make in the history of that line. You want that to be authenticated on the blockchain, not only the ownership to be authenticated, but the service records to be authenticated, which then
Can
makes
you do that with a VIN?
You would think so. You would think so. But let me finish. So you have not only authentication, but what can be built into that blockchain, what can be built in that quote unquote smart contract by Aston Martin itself, is they can control when that vehicle is moved, is resold, right? There's a large market of people that buy those cars, then resell them for 3 to 5x what they bought them for, right? They're collectors' vehicles, right? These are utility type of conversations and things that are being built right now. A couple of things that I mentioned are things that my company and my partner are doing. But these are the type of things that will need to be part of the conversation that have nothing to do with speculation about a token. It's blockchain as authentication. It's blockchain as a smart contract. It is the movement of the financial process into, again, a furthered digital age that allow people to, move money back and forth in a way that is more transparent, and adds value to that transparency, right? To me, that's where this is headed. And the washout period associated with, let's create a token, then let's leverage that token, then let's lend that token, then let's take the leverage and try and blow up another token, that has to go away. I mean, it just has to go away, and it's in the process of going away.
There's nothing left. I don't think I think it's pretty much gone. Like the last ones standing are under the microscope now.
Correct.
Mario, you actually asked a really good question. earlier, like what does the future of crypto look like? We're talking about DCG, we're talking about all of these entities, and they're all centralized. So they're not actually crypto, they're just dealing in digital assets. And that's a real significant difference from what the future of crypto holds and what the future of CeFi TradFi holds. Someone in here talked about, and they said that these guys were all talked about as being leaders of the future of money. But we went backwards and went against our grain of crypto and back to the old centralized finance, back to the old traditional finance. Crypto was always intended to be decentralized. It was intended to allow you to own your assets and have them. And to John's point, when he made a point and he talked about transparency with these regulated entities, I would argue that, and I am a crypto maximalist. I will say that up one side, down the other. I live on chain. That transparency is not. It's not transparent. It's transparent to regulators, but it's not transparent to the public. Right? I can't go in and go as a public figure and see what was going on over there. Right? I can do that on chain. Right? That's transparency. So what we've seen already is a massive shift into self-custody, people getting on chain, people using the decentralized exchanges more because, well, traders are going to trade regardless. How you regulate those is going to be a really interesting question. There's a couple of DEXs that have come out that are doing KYC. You can look at 1inch Pro. There's another one.
It's a fair.
Damn, really? Wow, you've got decentralized exchanges that are doing the bare minimum to move money. Damn.
Well, I mean, it's a real challenge, right? Like coming from a product owner and somebody building, like it's a real challenge to get to that point of the regulatory side and figure out how you integrate these on chain just because it's a new technology. Now, some of these
not an excuse.
They just can't, right? Like they physically can't.
I want to go to Mike. Mike was able to jump in before going back to John. Mike and Andrew, I know you got to jump off, so if you're over time, just feel free to just hop off. I appreciate you being here, Andrew. And Mike, you were one of the first as well to cover or to ring the alarm on DCG. What's your thoughts on where things are at now, and what do you think is next?
I mean, like I've said before, I think they're a smoking crater, and everybody knows it. The thing that's kind of fascinating to me that we don't know yet is they had a cash cow in Grayscale, right? Like they had hundreds of millions of dollars a year coming in as revenue that probably didn't cost all that much to generate. And yet they somehow managed to burn all of that in addition to burning all of the money from Genesis. And obviously some of that went down in 3AC. But like, for example, why the hell did they need to steal like $600 million out of Genesis? What other things were they exposed to? That's the part that I think is going to be interesting, is finding out who else is exposed to this thing and who's going to go down besides the Gemini exchange. And then, yeah, just to the point really quick of the nature of centralization and decentralization. I mean, ultimately in any unregulated market, centralization is going to happen. So this idea that somehow you're going to avoid these consequences and end up, the reason why this TradFi, going back to the TradFi thing, which is this narrative I'm seeing more and more, that's going to happen by nature of how like systems operate. So I don't really hold out a lot of hope long term for this crypto space being able to avoid the perils of eventual centralization.
Mike, one quick question before you go. You mentioned you think that Gemini would go down. Do you actually think that the exchange could be pulled down through the earn problem?
Well, I don't think that. I mean, I don't know enough about their finances to know, right? I mean, we don't know like what percent of their business was this earn product versus the amount they were generating from just operating their exchange. I mean, what we do know is that the only exchange that I know of that publishes regular financials is Coinbase, and they're losing their asses right now. So I can only imagine that Gemini is not doing a whole lot better in terms of their exchange business, and we know their earn business is absolutely destroyed. So, I mean, I just don't see a scenario where they survive the combined effects of a bear market, their earn product turning into a giant cesspit of fraud, and then on top of that, their all of their reputation being destroyed by having done business with Barry.
I would say it does appear that they did a better job of segregating their exchange business from their earn product. I think I'd be
Right.
surprised if those were commingled.
I don't think. Yeah, I mean, I don't think the Winklevi were engaging in fraud here necessarily. I think they just had very, very poor due diligence, and I don't think that they were like, illicitly mixing funds or anything like that. I think the risk here is number one. I mean, clearly, how much of this money they're going to get back is not much. They're going to get their asses sued, and then they're just facing such other like hurdles, just like every other company in crypto is that combined with this reputational damage and the loss of
Being
this whole
sued by the
aspect of their
CFTC
business.
as well.
Yeah, I mean, and yeah, they're gonna. I mean, come on, this is we're just seeing the very first stages of the consequences of what's happening here. I mean, Barry's done a good job. But you have to remember, Barry, built his business on selling the stock of bankrupt companies, and a kind of an ominous thing, right? A couple decades later, we see the consequences maybe of that, but he knows what he's doing when it comes to bankruptcy. So the fact that we see him using all these delaying tactics, he's doing everything he can to try to save what's left of his empire from Genesis sucking it down. I mean, I don't see any way that happens. I'm not a lawyer, but when you're obviously commingling assets between all of your different businesses in a way that's incredibly suspect, taking demand deposits and using them to buy back your own illiquid stock. I mean, these are questions that I think a lot of regulators are going to be really, really interested in, and I just don't see a way that DCG survives at all. I don't see a way that Genesis or Gemini comes out of this with really any reputation left.
John?
Well, you can beyond Gemini. Listen, I've been in crypto since 2014. I am reticent to put any funds on any exchange right now. I mean, we're in an environment right now where any centralized exchange, you have no idea what's going to happen. John talked about a potential sweep. If there's a potential sweep coming, which anybody with meaningful brain cells, based on the last 6 months of what has happened in crypto, you are taking an enormous risk putting any funds on any exchange right now. I don't see. So in other words, it may not be any sort of legal issue, malfeasance, any number of words associated with legal risk associated with Gemini, but the just lack of people trusting any exchange whatsoever, no matter what they've done or who they've been. It's just it can be
they shouldn't trust them.
I mean, they
withdrawal
shouldn't trust
can be
anybody.
turned off at any second. And so, why would you risk your capital?
Absolutely. I absolutely agree. All I'm saying is that Gemini's in a particularly bad spot, just given that all the different things all the confluent things happening at once. I mean, look at Coinbase paying a $50 million fine just to the state of New York, right?
Hey,
like what happens? What happens when all these other states start jumping on board, saying, "Hey, we're going to sue your asses too"?
Right.
I mean, they're literally the risks here. I mean, there are so many different risks that these companies are facing simultaneously in general. Yeah, I mean, anybody who's holding their money on any of these exchanges is insane. I mean, especially in light of the recent Celsius decision, which, I mean, Celsius's user agreement was very, very, very clear. And that was something I harped on for a long time before they collapsed, was that their user agreement very clearly stated, if you give them money, man, it's their money. And the fact that people thought they could somehow get around that was amusing to me. But, the question of the legal ownership of these assets is not settled. And if you're, there's no reason to take that risk. I don't see the reason to take that risk.
Yeah, Mike, the terms may have been clear, but Alex went on an AMA every week and said that they're not and that they are their fund. So that's why they're in the misrepresentation.
Oh, yeah. I mean, I mean, I guess Mashinsky could argue that you shouldn't believe anything he said since he always lied about everything. But no, I mean that's a fair point. That's a fair point. But all I'm saying is that anybody, like that's very true. Anybody who has their money in any of these platforms, regardless of whether they're regulated, unregulated, onshore, offshore, owned by celebrities, owned by Harvard graduates or whatever, like you cannot trust any of these guys, even if they're trying their best, even if they were trying to be honest. The amount of shit heading their way is so colossal that it is unlikely that any of them survive.
Well, Mario, John, what do you? John's been trying to speak for a while.
Sure.
Yeah. I was gonna ask John. We referred to the sweep a few times. Can you just elaborate more for the audience what it means for crypto, what it means for all these companies when that quote unquote sweep happens?
Of course, and I agree with Mike. I think that anybody who has anything in an exchange is taking an extraordinary risk because, again, they like to say that they're regulated, but they really aren't. There are degrees, I guess, if you're a trust company. I mean, I tried to look into what it meant to be a trust company in New York and what sort of enforcement actions there were. There's nothing meaningful unless you're SEC registered, period, end of story. And when Gemini is suing up the chain, it almost makes me think it's like a Madoff feeder fund suing Madoff. So I appreciate what everyone's saying, and I think there are tremendous risks. So turning to a sweep, why do I think there is one, and what do I mean? Well, let's just look at what the SEC has been up to with respect to crypto. They brought over 120 enforcement actions. It's a very large number in a program area, a pretty new program area. They've won every single case, every single time. That's pretty much unheard of. They stopped initial coin offerings. And of course, when initial coin offerings were going on initially, there were all these fancy lawyers who would say, some of whom I know, some of whom I went to law school with.
You've got just John, there's a lot of echo and your mic is a bit muffled as well, just letting you know.
Oh, okay. I'll see. Let me just.
Sounds fine to me.
Sounds okay to you? Okay, well.
No, we can still hear you. If there's no way to fix it, it should be fine. We can still understand what you're saying.
Okay. Well, anyway, the point that I'm making is that, so you look at the ICOs where a bunch of lawyers said that those were fine and they weren't, even though they had the same essential sound as an IPO, that they weren't securities because they were tokens. Well, the SEC brought a bunch of cases and stopped those. Then came the simple agreements for future tokens, the SAFs, right? And the SEC's case against Telegram. And the SEC went the extra mile in that case. They sued Telegram in an emergency enforcement action called a temporary restraining order, where they said, hey, this is such a situation here that we're going to go to the court ex parte, meaning the other side can't even be here, and we're so likely to win on the merit, we want the judge to stop everything, shut everything down right now. And that's what they got, without even alleging fraud, which is unheard of in SEC history. In SEC history, every TRO the SEC has ever done, almost all of them, have been involving an allegation of fraud, but this didn't, and they won that case, even though a bunch of very fancy, very highly paid lawyers said that SAFs were not securities. Then came the lending programs, right? The SEC did the same thing. They charged BlockFi. They collected a $100 million penalty from BlockFi. And then BlockFi issues a press release saying, hey, this is great that we got to pay this $100 million penalty and we got to shut down our lending program because now we understand what regulations are needed and now we understand that this regulatory clarity, so we're going to register. Did they ever do that? Of course not. And then you have the Coinbase lending program, where the SEC issued a Wells notice to Coinbase. What's a Wells notice? Well, that's when the SEC, it's named after this guy, a commissioner by the name of Wells at the SEC, who did a study and felt that anytime the SEC sued somebody, Commissioner Wells wanted all the commissioners to hear the other side to the story. Because generally, if you're an SEC enforcement lawyer, you go to the commissioners and you say, here are the facts. We think we want to sue this company. And Wells said, hey, before you do that, we want you to notify the company, give them a notice, and let them write up something as to what their defenses are, so we can hear their side of the story. But generally, if you're issuing a Wells notice, and I've issued hundreds of them, if you're issuing a Wells notice, you've got your ducks in a row, you've got your case going. The SEC issues a Wells notice to Coinbase, and it's all in secret. The SEC doesn't even comment on the existence of an investigation. And what does Coinbase do? Their general counsel and their CEO go on Twitter and on their blog calling the SEC sketchy and calling the SEC names. Well, of course, Coinbase capitulated and didn't do their lending program. Then we moved to Grayscale, which is kind of relevant to this discussion. And Grayscale wanted this spot ETF. There's 2 commissioners at the SEC of the 5 who believe there should be a Bitcoin spot ETF. That's Commissioner Mark Ueda and Commissioner Hester Peirce, aka Crypto Mom. They believe strongly that they should be allowed to do this. The chairman and the other 2 commissioners don't. So the SEC issued a very thoughtful and long letter saying, here's why we think there's too much manipulation in the marketplace, there's no transparency, we have no way of policing it, so we deny it. Well, what does Grayscale do? Grayscale immediately launches this big appeal saying that the SEC's decision was arbitrary and capricious, which for those of you who went to law school, you know that standard is a very, very low threshold. And the SEC has issued a very thoughtful reply to those briefs. So Grayscale's kind of betting on this notion that, hey, we're going to win this appeal that the SEC's arbitrary and capricious because somehow that they by disapproving Grayscale spot ETF, even though there had been some futures ETPs that somehow these are the same product and the SEC is being arbitrary. So I think, my opinion, I think they're going to lose that lawsuit, and they're just waiting and they're hoping that a Republican gets elected in 2024, Hester Peirce becomes acting chairperson, and then you have a Bitcoin spot ETF and their problems go away. But for the time being, you asked about the sweep. Well, you know, if you look at these progressions of cases that I just laid out, and you think about also something we really haven't talked about, but it was touched upon a few times, all the dire externalities associated with crypto. You know, I'm a ransomware expert, and but for Bitcoin, there would be no ransomware. And ransomware is a horrific scourge right now. It's just getting worse and worse and worse. There were just 1,241 ransomware payments reported to FinCEN last year. And that was twice as many as the year before. And the total amount was 1.2 billion in payments. And that's just what's reported. There's lots that aren't reported. So you have drug trafficking, drug dealing, human sex trafficking, murder for hire. Just about every single crime has increased exponentially because of crypto. And, you know, yeah, you could say there are crimes associated with fiat. I get it. But that's really not an argument that works. Yeah, it's not an argument that works.
I want to one other quick question for you, John, just briefly before we go to Simon and Fidgetal. Is you know, I know this space is not about Binance, but a lot of people are asking about Binance and have concerns with Binance, and we covered it I think a few weeks ago before the New Year's. I did hear from a few sources that I don't know if it's public actually. There's an SEC investigation into Binance. What do you know, and what are your thoughts on Binance?
Sure. Well, obviously, I don't have any personal knowledge of an SEC investigation of Binance, but it wouldn't shock me. My bet is that there is one. What's unbelievable about Binance, again, this is this co-opting of nomenclature that I talked about before that's so disturbing. They call what they did an audit, just like Tether calls what they do an attestation. But it's not an audit.
And the audit company literally specifically said, this is not an audit, then quit crypto auditing forever, which is what I like to call a very good sign.
Yeah, well, you talk about red flags. That's a good point. Think of it this way. Suppose you live in a house and your house costs $500,000, and you want to take, and you've got no loan, well, you want to borrow $100,000 against your house. And you want, so you go to a bank and you say to the bank, hey, I want to collect $100,000 a loan from this house. And the bank says, okay, we're going to send an appraiser over. And that appraiser is going to give you a financial colonoscopy. And they're going to look over every inch of your house. They're going to look over every liability you have. They're going to look over every single potential problem you may have in paying that loan back. And you don't agree upon the procedures. The appraiser says, here's what I'm going to do. Now, you better agree to it or you won't get the appraisal and the bank won't loan you money.
Much like auditors, appraisers wildly vary in the standards that they hold, and many of them are untrustworthy. So that's great.
That's exactly it. So the equivalent would be what I think Binance got was essentially a satellite snapshot of the house. The appraiser was not allowed inside. No liabilities were discussed. No liens were discussed. Nothing was discussed about the safety and soundness of the house. So these satellite snapshots are not worth anything. We don't even know where the company is headquartered. And today, a bankruptcy judge is going to hear whether the Binance acquisition of Voyager should move forward. And I can't imagine any judge letting it move forward without, they have a fiduciary responsibility to the creditors that to know exactly who it is that is buying this company. But we don't know anything. It's all mystery. And when you have those sort of red flags, at least from my training, when you have those kinds of multiple red flags, you sit back and say, this is a house of cards. This is going to collapse. This is a real problem. So that's what my instincts tell me. And is the SEC investigating that? And how could it not be? Again, all it takes is one complaint to trigger an investigation. And investigations are at different levels. There's an informal inquiry where you're just calling and asking questions. There's a formal inquiry where you use subpoenas, and subpoenas for testimony and subpoenas for documents. But essentially, the minute someone calls me and asks me, did you hear about this problem, or tells me about some problem, and I make one call about it, even to a colleague, even to call to the FBI to see if they're looking at it, that's an investigation, and it gets a file number, and you start moving. So, let's keep that stuff in perspective too, what it means to have an investigation. So go ahead.
Yeah, Simon, I'd love your thoughts, kind of wrapping up what John just mentioned, and then the previous questions is what it means for all the other players in the space and crypto in general.
Yeah, I just want to say, as somebody that's advocating for this industry since the first Bitcoin conference, speaking at it, we originally created this for reasons about, I just want to combat the negative narrative based upon the bad actors and those that are creating centralized companies. This industry was a movement to give people the ability to own their own money and have a transparent record of it on the blockchain, so that you can take the middle person out, so that when that happens, if you commit crime, there's an immutable record. And that led to those that stole the money from Bitfinex being caught by the Department of Justice. Freedom to transact is freedom of speech, and the ability to combat against the Ponzi schemes and crimes of governments and banks, debasing our money, is a very important thing. And so hard money, whether it be gold or Bitcoin, is an important thing to bring to the world. Now, you could blame the dollar for all of those child sex offenses and all the stuff that happens with the dollar. It also happens with Bitcoin. But to say that of course, new technology enables new types of crimes, just like the car enabled the ability for people to get away from a bank heist. But it doesn't mean that you disable your people of the ability to opt out from the crimes that governments and banks are creating by debasing our money and stealing our savings.
This is conflating two extremely different things with each other. There are regulations and rules that exist within real money, and trying to say, hey, we need all this stuff to happen. We need crypto to exist in this weird, lawless black hole. Sure, I get you're saying new things do new things. Whatever. But at some point, someone needs to
be conflated with the subject that you're discussing right now. If a centralized company ignores securities laws, and if somebody creates money and prints and ignores security laws, that has nothing to do with Bitcoin. And this is what we fought against for years. When people we were fighting against money printing, and the fact that everyone took it as an opportunity to print their own money should not be used as an opportunity to say, oh yeah, we have to use the dollar, because all of those crimes.
If I release 1 million chocolate bars and 1 in 10,000 of each chocolate bar explodes, killing the eater, should I take all the chocolate bars off the goddamn market, or should I just leave half of them? Because not all of them explode.
You're not talking about Bitcoin, Ed. You're just not. You're talking about FTT. You're talking about SOL. You're talking about.
These are some of the worst takes I've ever heard.
Yeah, that are created.
I'm sorry, guys.
I agree, mate.
Here. Well, we agree to disagree. That there is a massive difference between Bitcoin and quote unquote crypto.
Okay,
there always will be.
All right.
Can I start with the wrong takes from the legal perspective? What you guys are not taking into account, which who's a practicing attorney up here? Raise your hand.
I can bring my attorneys on at Brown Rudnick,
not me,
Stephen
but
I'm Stephen Pally,
no problem.
Haley Lennon. I think they do it.
So what's your point, Fidgetal? What's your
millions on lawyers in order to try and comply with securities laws in this sector?
So what's your point, Fidgetal? You're muted.
They'll agree with this one point that you are all missing, is that what crypto companies are doing with their big lawyers and these, the Celsius thing is a different situation, but they are testing the SEC. They are probing and pushing the SEC to legislate by litigation, which is what they don't want to do. So what they're actually doing is they're pushing the SEC and pushing the lines of the SEC coming down and saying what is or isn't a security on a large ass company before the government makes a decision. So they're actually winning in these cases. That's what's really happening at the core. Tether is winning. Ripple is winning. There's a reason why these cases haven't settled. It's because they can't settle. If you speak to your attorneys, ask them how a Ripple case actually can settle. Because the fundamental single purpose is they would be saying that they did or didn't do any legal security of the launching of XRP. Very similar with Tether. The SEC is in a pinch and in a hole right now. They need to push these until legislation occurs, which is not going to happen until mid to late 2023 and probably won't solve all these. And what we're really seeing is a global determination about where business runs and where business stays, and how we define what is an accredited and an unaccredited investor. And my guess is we get a version of a Jobs Act Title III, a Laws Act, that allows for even slimmer and more acceptable access into investing, as we reflect on the fact that we now have more information in the internet age, right? The information asymmetry was the basis for why the SEC regulations exist in the first place, right? Howey Act, the Howey test started when we didn't have the internet, when we didn't have access to information, and information asymmetry was the core issue of why something needs to be registered. Can you get the information? Can you trust the information? And thereby, do you have enough money to be adult or not? Right? That's basically what 1933 Securities Act is saying. You have enough money, you either should know better or you have enough money to suffer the loss. What we're really seeing, and I'll stop at my rant because I don't even know where to stop, but if I give you $1, you do not know where that dollar came from. Crypto, especially established and transparent and decentralized crypto, is infinitely more efficient and infinitely more trustworthy than dollars are and will ever be. Period. End of conversation. Right? The biggest concerning part, now to flip on the other side, is if Binance wanted to do an audit, that's the whole point of blockchain. That's the future of blockchain in terms of utility. It's not crypto. It's you can snapshot the shit out of every fucking crypto coin, out of any asset at any given time, and produce a QuickBook Excel spreadsheet.
Unless the liabilities weren't kept on chain.
Correct. The whole point is not about
the whole blockchain audit thing is a bit of a Trojan horse because it can be used, to deliberately mislead people and have legal contracts on top. So it certainly gives you additional information, and really, Dirty Bubble Media did all his research and detected this additional self-regulation layer that we have in order to add on top of it as a result of those being able to audit those transactions. But it's definitely
just trying to separate good actors from technology. The technology is pristine. It's the actors in the space that happens in any space that are not.
I want to quickly end it with Ed and Simon. Just final thoughts, very briefly. Where do you see DCG, Genesis, Gemini in the next 24 months, and crypto as well?
I think DCG and Genesis are going to collapse. I don't know the precise workings of how much they owe of the Grayscale Trust. DCG, on best case scenario, DCG is very stupid and they've lost a lot of money somehow. Worst case scenario, they know exactly where it is and it's gone. And that there are a bunch of people, we don't even know who else has loans in Genesis. We don't know. It could be worse. And I realize pontificating on what we don't know is kind of useless, but there's billions of dollars here that is just missing in action. Maybe some of it still exists, some of it doesn't. But if there is a situation where a bunch of GBTC, to Simon's point, if there is a situation where people turn in their stocks for actual Bitcoin, there's a decent chance there's a good sell-off from that. And on top of this, consumer trust, retail trust in cryptocurrency right now is going right in the toilet. And that is thanks to Sam Bankman-Fried, but also thanks to a fairly quick succession of really bad events, because it's very obvious that none of these people, including the Winklevi, really thought about this too hard. They didn't get ahead of the law. They didn't try and operate as legally as possible. They tried to operate with a complete and utter despicable greed. DCG, Barry Silbert and the Winklevi, same level of greed, just different flavors. If the Winklevi cared about their customers, they would have a shutdown earn the second Genesis's exposure to 3 Arrows Capital came to light. They chose not to, likely to keep the scam going, to not cause more damage to the cryptocurrency industry. And what we're going to see now is a significantly worse scenario than the one if they'd have actually been ethical, both for the markets and for the customers, and for Gemini's customers. If even a quarter of that money is gone, that's over $100 million. And I think that I don't really care. Like, if Gemini goes up or down, I don't have any money in crypto. But my point is, if this is the reckoning, I hope this washes out each and every one of these scumbags. I hope they suffer legal ramifications and financial ones. And if all of you, and I know there are lots of cryptocurrency fans within this audience, obviously, I'm speaking to you directly. If you want your industry to last the test of time, you should run these assholes out of town. If you have any ethical backbone, if you care about actual people using this technology, now is the time. Don't just focus on SPF. Don't just focus on Barry. Focus on anyone, CZ, the Winklevi, any of these people. They must be held accountable. You cannot do PR for billionaires, and that includes the Winklevosses. Thank you for your time.
Simon?
All right. Well, thank you very much for a passionate thing. And I think it's really important to put that level of energy, because behind all these numbers of 1 million accounts, 5 million accounts are real people, and real people that were misrepresented by the Alex Majinskis of this world that put their life savings and retirement plans because of the way these were misrepresented. There's lots to learn from these different companies, and justice does have to be served. What I hope that comes from this, if we're going back to Digital Currency Group,
I want to ask you if you agree with Ed's pessimism on
I believe
DGC
that I believe the Digital Currency Group has a big hole. Its shareholders, mainly institutional and TradFi investors, from my understanding, shareholders should always be represented the risks and disclosures. And if someone deviated from that business plan and it wasn't disclosed to them, then there are consequences, and that's why securities laws do exist. I do believe that if we don't see an announcement from either Barry Silbert putting up his own money or another investor, which I don't believe there is, because they would probably wait for the company to go into Chapter 11 and try and buy those assets in distress in an auction. So I don't believe that the money's there. But if we don't see an announcement of funding in the next week or two, then I'm very concerned about the situation. What does that actually mean? Well, people say, yeah, but you got GBTC. I think GBTC in today's market, because other regulators outside of the SEC have allowed ETFs to pass through in other currencies, they have vastly superior products for getting exposure to Bitcoin. And so therefore, I don't think it's a good product anymore. It charges a 2% fee. It served its time, its purpose. I don't think there's many buyers because it's a vastly inferior product to what is out there in the market. So my hope is that we don't go for, bailouts don't work. They don't exist in our industry. So I hope we have a bail-in. There's lots of assets in Digital Currency Group. Those can be issued to creditors. And I think we've got 2 years of Chapter 11 suing other Chapter 11, suing other Chapter 11, because all of these different cases were interrelated to each other. And unfortunately, creditors are going to be suing each other for other creditors, and it's going to create a lot of hostility, game theory, and real problems in the market. But I do want to end that this is a really big one. But I've been through many of these cycles, and each one we get a bigger one. And Bitcoin always survives at the end of it, and people learn that there is a use case which all of these companies don't have, which is the ability to own your own money, spend your own money, and have a fixed supply to combat both the fraud of fraudulent crypto players that ignore security laws, and also fraudulent governments and central banks that debase your money and make it impossible to save in the current environment and cause cost of living
I remember
crisis.
we kind of concluded the FTX saga with a similar message, and now we're dealing with DCG. And also remember when we did the DCG space, we were probably one of the more critical ones, and we faced a bit of backlash for being critical, and yet we were still being careful on what to say and what not to say, and we just couldn't get ourselves to criticize DCG directly, despite Andrew coming on stage then and giving us some concerning numbers, and despite the numbers just not looking good. So we had concerns, but we just couldn't be too critical. And then look at us now. It just takes time, but it seems this year it takes time, and it ends up being worse than we initially expected. I want to go to, but one thing, Simon, before we kind of close it off with Fidgetal and John, you did mention about Barry investing. How much Barry, obviously we don't know the exact number, but would Barry have enough liquidity to make a difference?
Well, from if I remember, he bought a bunch of Bitcoin from the Department of Justice from Silk Road, and a very, very. I believe he is a billionaire from what I can see, and I believe that when people have made mistakes like this, if there are, I think there is a duty to, if creditors are going to lose a lot of money and they did a lot of things wrong, then just like Alex Majinski right now, he doesn't deserve to be wealthy as a result of this when everyone else's savings are on the line. And so I think you either decide to put some of your personal wealth into the bailout package because they're the only one that's incentivized to do the bailout, simply because everyone else could get a better investment by bidding for the assets on the cheap, or it goes into Chapter 11, it goes into examination, and all of the lawyers make a shit ton of money. They get creditors to pay because the Department of Justice didn't pay. And sorry, Chapter 11 is one of the most horrific, scammy processes I've ever seen in terms of the cost to creditors. And remember that it's all in the name. Chapter 11 protection is to protect the company from creditors, and it's an awful process.
Fidgetal?
Simon, correct me if I'm wrong through this little thought process. My guess is that whatever hole DCG has, it has enough assets in terms of companies, investments, positions to probably cover any hole that they have. Do you disagree?
I do disagree. Yeah, I think that there's a bigger hole in the assets that they have at the current valuations, but a lot of them are illiquid assets that would be hard to value.
So I think in a Chapter 11, I think you're correct. If they sold on the open market without this scrutiny, my guess is, and this is not financial legal advice, that they could make creditors whole to a large degree, which is really what we're talking about here, right? If we can separate out the two things, and I think there's actually three things that we're talking about. We're also talking about accredited, not accredited investors and risk asymmetry. I feel bad for creditors, 100%, especially the ones that were not knowledgeable. But there's a big thing that's not being talked about, which is a lot of people in crypto have made asymmetrical gains that are not market, that don't follow money markets, right? And they know a lot of the risks that they're taking. That's why they don't cry as much, right? Bernie Madoff used a regulated system. I just watched a show last night and took advantage of innocent people who did not know their risk. There is a larger paradigm where people can, should, and will be allowed to take risks that doesn't clean people off the hook. Scam is scam, fraud is fraud. They should be persecuted. They should be hung off the windows, or their wallets should be. The reality is, anybody with half a brain knows that we actually, as an attorney, as a decade-long crypto person, we want regulation. I want regulation. I want risk symmetry. I want clarity. I want reliability. I want less gains, right? And this to be less of a casino, so that retail money can come in. Because at the core, again, I'll end with this passionately. Crypto is not blockchain. NFTs are not blockchain. Blockchain is a technology that will will continue to revolutionize our entire world. Combined with AI, it's nearly unstoppable. Regulation, persecution, I'm down for all of it. Go ahead, Mario.
John, final words
Sure.
briefly on where you see DCG, Gemini and Genesis in the next 24 months in crypto in general, and then we'll get Fried Chicken to wrap it up with quick market analysis.
Sure. Thanks, Mario. I do think there's a regulatory onslaught that's looming, not just from the SEC, but if you look at what the FDIC has said, the OCC, the Department of Labor, all of the American regulatory authorities, the DOJ with its new crypto unit, the SEC's new crypto unit, every single, especially the IRS. The IRS just got $80 billion, and they've got to collect money to make up for the Inflation Reduction Act to fund that. And they're going to do it by going after all of the people that own crypto and making sure they haven't paid their taxes. The data analytics are unbelievable. You can look at the John Doe subpoenas that the IRS has filed they'll go to a place like Coinbase and say, give me every single person who traded Bitcoin over the last 5 years, and Coinbase will say no. And the IRS will go to court and will win. They've won every single time with these John Doe subpoenas because the data they have found in terms of the amount of taxes that they've collected and the amount of gains that the exchanges have promoted as occurring, there's a huge disparity. So it's going to be like shooting fish in a barrel for the IRS, and that's going to create incredible transparency and pressure and sunlight into these transactions. There are some regulatory things that are happening in 2024. All the exchanges are going to have to report on 1099s in accordance with the Infrastructure Act. Are going to have to report all transactions on crypto, just like if you had them with a normal broker-dealer. And also, any retail transaction over $10,000 is going to have to be filed. You're going to have to file a form involving anything crypto. You go to 47th Street and buy a Rolex for more than $10,000 with crypto. That's going to be reported. So there's going to be incredible sunlight. FinCEN has also said that they're going to change a rule. Right now, if you're outside of the United States and you have more than $10,000 in the aggregate in a bank account, you have to report that or risk going to jail for 5 years. And FinCEN has said, the Treasury Department, FinCEN under them has said that they're going to change that to also apply to crypto. So there's big regulatory
So what does that mean exactly? So anyone that has 10,000, I think Umbrella was telling me about it a few weeks ago.
Right.
Can you just explain briefly what that means?
Sure. On December 31st, 2021, I think it was, or 2020, FinCEN said that there's this general rule in the U.S. that says, hey, if you've got more than $10,000 of cash outside of the U.S. in a bank account, you've got to report that on an FBAR form, a financial bank account reporting form. And if you fail to do that, you actually can be hit by more than 5 years, by up to 5 years in prison. It's very serious.
If you fail to report $10,000
file the
plus,
FBAR.
Yeah, file the FBAR for if you have $10,000 plus in a foreign bank account outside the US for any US citizen, correct?
Exactly. And so, and FinCEN made an announcement, a very short announcement, where they said, hey, we're going to we're going to add to our rules so that covers crypto. I mean, I get it. I get the libertarian notion. I'm a libertarian at heart. I can be very critical of the SEC and have been in many ways, including a Wall Street Journal op-ed piece. I don't like government knowing everything I'm doing. I don't trust government. I've written some very tough articles on the FBI with the way they use 302s to collect witness testimony. I get very nervous about government doing anything. But when it comes to money laundering, there are 12 or 13 anti-money laundering statutes on the books. The Bank Secrecy Act, the USA Patriot Act, the Anti-Money Laundering Act. And they all are very specific. You can't even go into your own bank account and withdraw more than $10,000 without FinCEN getting alerted to that fact or doing anything suspicious. Now, you might not like that, and you might feel that, hey, I wish the government didn't do that. I wish I lived in a place where I could be a little more private in my transactions. And I get that, as I said, but the reality is that's what the laws on the books are right now because of fears of terrorism. No one wanted Osama bin Laden to have a bank account or a brokerage account. So that's what I would end on. That I'm sympathetic to that libertarian notion, but it's really a policy argument, not a legal defense. And when you talk about ransomware and you talk about all these externalities and you say, well, crypto is traceable like nothing else before, I really disagree with that. I wrote a lengthy article about it. I've spent many time working with the FBI on many different types of projects and investigations, and even including some recently. And no one at the FBI would say that. Occasionally, yeah, they get a big find where they find, a laptop in a popcorn tin under a blanket in a bathroom. 10 years later, with the assistance of an alphabet soup of federal and international regulators, they're able to get the Bitcoin. But most of the time, and I speaking specifically, for example, of ransomware, no one ever gets caught. The money never gets recovered, and that's because it's not traceable. You can say that it is, but it's not.
John, didn't you say earlier that the chain analysis is at such a level that a lot of people, they'll be able to track everything and people will get taxed?
No, someone else said, no. I'm saying that they will go to the exchanges and get your accounts, which have your name on it, and they will come after you for not paying your taxes.
So how about,
if you want to commit crime, Bitcoin's a bad idea.
Bitcoin's a
Dollars is
great
better, I
idea.
disagree.
Bitcoin's a great idea. Look at ransomware. Look at when I teach at Duke University Law School in North Carolina. When a ransomware attack hit the pipeline, there was no gas for anybody. You couldn't get home from the airport, and
Yeah,
no one ever
if you
got
want an
caught.
immutable record of your crime that lives forever, then use Bitcoin. It's not a good idea.
There may be, it's a great idea. It's enhanced every single crime. Any FBI agent will tell you that. Respectfully, I just disagree. As I said, you can look up on my website. I wrote a big article about the traceability of Bitcoin, the way they use mixers. There are so many ways to use some different types of technological subterfuge to hide who you are. If what you're saying is true, then all these ransomware attackers would get caught, but none of them are ever caught. Maybe once every couple years they catch somebody after a 5-year investigation. So empirically, I just don't see how that
So what you're saying,
jives
because
with that
one of my questions to you, John, was going to be, like I've been waiting for the day that all these different scammers from 2017 start getting caught one after the other. What you're saying is that day may not happen.
No, of course it won't. Look at the 1,241 ransomware payments that were made over the last year and reported to FinCEN in the amount of $1.2 billion. How much of that money was recovered, and how many of those people were actually somehow captured and brought to justice? The answer is zero.
Simon,
So
I think you disagree with that particular point, I guess, Simon.
No, I'm just saying, criminals get away with all sorts of stuff with dollars. Crime exists, right?
But you can't pay make a $5 million ransomware payment with cash. How are you going to get the cash?
Saying that
How are you going to
Bitcoin
move the
created
cash?
the ransom industry, or was it around
Yes.
before?
Bitcoin.
So we need to get rid of humans. There's no ransom in general, right?
No, but for Bitcoin, ransomware would not exist. It didn't exist before Bitcoin because there's no way to collect and pay the ransom. There's just no way to do it. You'll get caught. But you don't with Bitcoin. Same thing with child pornography.
Did child pornography exist before the internet?
Yes, absolutely. But it's grown exponentially because of Bitcoin.
Do you want the internet to go because of that?
No, again, you're confusing apples and oranges. What I'm
saying is we need better regulation to
allow people to transact peer to peer and allow an immutable record for law enforcement to do their job rather than outsourcing it to financial institutions and ruining the user experience of money to the point where I don't even believe that I own my money in a bank right now. I won't put hardly any money in a bank because I know that it's not mine. It can be spent and it's subject to all of the problems that happen in the banking system. And I'm not saying that, you're saying that because of that, you don't allow people to have a fixed money supply, own their own money, and have freedom of speech and freedom to transact. Then,
well, what I'm saying is that there are a whole series of laws in the U.S.
and we're complying. We can comply with those laws when you do in a peer-to-peer transaction. It's just you're saying when there's a financial intermediary, which is what you have with the on-ramps and off-ramps, which is why you should have regulations of centralized companies, and they should be punished for not complying with laws, and they should be scum for not complying with securities laws and disclosing. But to use that as a mechanism for taking away probably one of the most important things in a cost of living crisis and an environment of mass censorship, to take away this good compromise of you get to own your own money, you get to spend it peer to peer, and you get to combat the fact that the government does not give a shit about your savings.
The dangers of that are astronomical. And look at all the people at Celsius. Look at all the people at FTX.
That's nothing to do. Celsius didn't use a blockchain.
I understand.
Celsius is a company that violated securities laws and illegally operated a bank. That's got nothing to do with
it has everything to do.
Rights ability to own their own money.
Are you teaching this stuff at Duke University? Are you telling the students these lines of thinking and reasoning to students in college at Duke?
Absolutely.
Absolutely. Well,
and Georgetown before that.
When the US dollar is less important in the world, good luck being competitive.
That's not what I'm talking about. As far as competitive, that's not what I'm talking about. What I'm saying is it's axiomatic. Every single government agency in the US, the Treasury Department, the Department of Justice, FinCEN, the SEC, the FINRA, every single one has talked about how crypto is created an epic crime
Nothing
wave.
to do with crypto.
And
Of
You're
course they do, because they want to
conflating
tax it.
different issues.
They
You're
want to tax it.
conflating Bitcoin with crypto with centralized companies.
All right, guys. I think we're going off topic. I think it's a topic worthwhile for another space. But I do. Oh shit! I muted everyone by accident. I do want to kind of end the space with Nostra and fried chicken. Just wrapping up with market conditions at the moment, and if DCG and Genesis do fall, where do you see the markets in the next 12 months?
Yeah. Thank y'all for having me on again. So when I'm looking at the chart, I think there's two different things converging where technical analysis and the fundamentals are really, really converging together right now. When I have a total crypto market cap chart pulled up, if you run a fib from the 2020 COVID bottom to the all-time high, for the past 8 weeks, we have been sitting right above the 786, which would be the last breaking point before, in my opinion, a capitulation. All at the same time, we're hanging out hanging out on top of this support. At the same time, you have all these new instances, DCG, you got Binance FUD, you got everything that's already taken place in the last 2 months. And it's almost like if one of those things cracks, you're going to see total crypto market cap pull back. In my next, right now we're sitting at 770 billion. I'm looking closer to the 450, 500 billion mark for the total crypto market cap over the next 12 months. And I mean, if that were to take place, that puts in a lot of price points for Bitcoin to be sitting around that $10,000 to $12,000 mark, where I think a lot of people have been calling for. A little longer term than that, you were asking about 24 months earlier. I mean, I think this is a pivotal point for the cryptocurrency space as a whole, because we've watched for the last 10 years, 4-year cycle theory play out continuously. I think it would be arrogant to assume 4-year cycle theory is just going to happen. It has to play out again, because I don't see equities taking a big bounce in the next 2-3 years. And right now, Bitcoin to me has been almost like a leading indicator for the NASDAQ. And I'm not sure, if the 4-year cycle plays out again, well, great. I mean, it's just more confirmation that the halving is that important. I think it's something that a lot of people in the space need to keep in their mind about 4-year cycle theory. Just because it's played out 3-4 times before doesn't mean it has to keep happening.
Nostra, any final thoughts?
Hey, Mario. Thanks for letting me speak. In the last 6 months since Luna blew up, we haven't really seen the crypto market, especially Bitcoin, price in any of this negative news. We saw 17,600 back in May. We're at 16,800. So I think a lot of these bad news, especially for this week, hasn't been priced in. So I personally think there's a lot of downside still left to go. And just to end it all, I want to make a comment that negative news that came out from Silvergate. I think that's a lot worse than a lot of people assume, because Silvergate is the bank that USDC uses to redeem and issue tokens.
What's the news, Nostra?
There was 8.1 billion withdrawals of deposits from Silvergate. The stock was down 46% today.
Remember when you covered Silvergate, Simon?
Do you know this is FDIC insured?
Silvergate?
Yeah.
They are a traditional bank. I believe they are FDIC insured. But the issue being is they were in the center for a lot of this crypto stuff. They were also involved with FTX. Silvergate had some funds on FTX that they lost. So the problem could be because they're the bank that issues and redeems USDC, the stable coin token, is the federal government could possibly confiscate some of the funds like they did with the ruling of Celsius, that the people who had their money on Celsius was ruled that was the property of Celsius and not the account holder. So you could have a lot of issues depending on how it was structured and how it was deposited and what terms there were. So I just personally believe there's a lot more contagion, especially because yesterday we had that news about Coinbase paying was it 50 or 100 million in settlement to the SEC for not abiding by KYC rules?
Yeah. No, I do share concerns. So, that is the weakness of the banking system, that obviously only 1% of the total deposits in the banking system are insured by FDIC. So if you had a financial crisis as a result of the US dollar Ponzi scheme at the same time as the crypto exchanges having some kind of implosion, and FDIC would not be able to cover it because you can rehypothecate and create money in the traditional system. And it is the weakness of a bailout model. So I think you'd more likely see some kind of bail-in model if there were to be. But I do think, that is an important on-ramps and off-ramps to the cryptocurrency exchanges. And if we do use the US dollar on-ramp and off-ramp, that is a problem. But it means that we'd probably we'd probably have to look at other countries that are looking to see this as an opportunity outside of the US. And I do agree that the 4-year cycle is definitely not a guarantee. This is the first test of the 4-year cycle because we've always been in a money printing Ponzi scheme with the dollar in the whole life cycle of Bitcoin's history since they bailed out for the 2008 financial crisis. So this is the first test of quantitative tightening. My guess is that the government will realize that the recession is too painful and they'll print off a central bank digital currency and let banks go bust. So there would be concerns there. Certainly, I share that Silvergate is an issue.
Yeah, I just want to mention that Silvergate is a bank, not an exchange. So when they have 8.1 billion in withdrawals, there's a huge leverage there because they're all fractional reserve. So I would be very concerned that there'll be a massive spillover to the rest of.
Do you know how much assets they have?
I'm not sure.
So yeah, we'd hope that the regulations in banking would have a decent stress test there. But as a public company, I'm actually gonna I'll start looking into those accounts a little bit deeper. I think. Thanks for pointing that out.
Cool. Well, what a great way to end the space. Such a bleak note. I thought FTX was potentially. We knew that it's going to be a bunch of dominoes falling. But Simon, I don't think you did. You even think about DCG back when FTX was collapsing?
No, massive surprise to me. But there's been a lot that has surprised me. But at the same time, it doesn't change my conviction about the need for what Bitcoin brings to the world.
I think most of us, like, if anyone's joining the space despite market conditions and where we are now, I think most of them would have that same conviction. Otherwise, they wouldn't waste their time. But
the number of Bitcoins held in wallets that don't regularly move is increasing. So the people that believe in the fundamentals of Bitcoin are increasing the supply into this weakness.
That's a good indicator. But it's... I've got here an article that was just sent to me. It's an article about Silvergate's bank run. That was an article from today. Thierry sent it to me. It would be good to have him here. But
which is a great reminder that all the regulations in the world. I do believe in regulations of centralized companies, but we've got to remember why we got into Bitcoin in the first place. Because when you deposit your money at a bank, the bank becomes the legal owner of your money. They can spend it as they choose, and they can create money every time they issue a loan. That is a Ponzi scheme, and that is an issue in the traditional financial system that Bitcoin doesn't have. So yeah, just remember.
But the traditional financial system, you do have the government there to support if things get too.
You have the government that they've got 1% of the entire insurance with FDIC. So if you have a systemic event like 2008, you have to get the governments and taxpayers to do it. So you create a cost of living crisis and create inflation and destroy everyone's ability to purchase their first property and create wages way out of sync.
Simon, like to end the space, I want to ask you that last question. We didn't expect DCG to fall, or we didn't even think about DCG when FTX was collapsing. Would there be any entity left for you to be concerned about, or there's none left? We're pretty much out.
No, there's three red flags. I covered this on my YouTube channel. Full disclosure, I'm a shareholder in both Circle and Bitfinex, which is connected to USDT. But I think the stable coins inside the US and outside the US still have some kind of uncertainty that we need to understand that could create a significant change in the market. And also, what we just don't know. Binance is not transparent. We know Coinbase, we know Silvergate, but we don't really know Binance. I'm not saying that any of those are going to happen, but those are three unknowns: digital currency group, stable coins, Tether, USDC, and Binance. And once we've got through those, then I think you could safely say the result of those will lead to what I believe will be a capitulation event.
Yeah. Well, if anyone in the early days of last year was didn't understand when we talked, like, the pain hasn't come, and the correction we're seeing is not real pain, where well, this is proof. This now is what we're going through is real pain, and it will peak if DCG and others fall, and it will be long. So I'm not feeling great to end it on such a bleak note. But the technology hasn't changed, and if you're in it for the long run, if you're building for the long run, if you're not leveraged, then just be patient. But otherwise, anyone that's still coming into the spaces and still in the space in the industry during these times, I applaud you, I salute you, and yeah, let's see what happens next. Simon, appreciate your time, Umbrella, and all other speakers. It was good to have you all. Thank you.